The global economy just got a major shock, and it's all because of rising tensions in the Middle East. Oil prices surged sharply on Thursday after Iran intensified attacks on key oil and gas facilities in the Persian Gulf. This comes as a response to an earlier Israeli strike on a major Iranian gas field, and now the world is feeling the impact. Brent crude briefly shot above $119 per barrel before settling near $110, still a strong jump. Meanwhile, U.S. crude also climbed, adding more pressure to an already fragile global market. But here's the real concern. Nearly 1/5 of the world's oil passes through the Strait of Hormuz. If this conflict disrupts supply for a longer period, we could be looking at sustained high fuel prices and rising inflation worldwide. And markets are already reacting. Stock indexes dropped across the globe. Japan fell over 3%, South Korea and Germany nearly 3%, and even the UK saw sharp losses. In the US, the impact was milder, but still negative. The S&P 500, Dow Jones, and NASDAQ all slipped, continuing a weak trend. Now here's where it gets even more serious. Just a month ago, investors expected the Federal Reserve to cut interest rates. But now, because of rising oil prices and inflation fears, traders are starting to believe rate hikes could actually happen instead. Treasury yields are climbing, loan rates could go higher, and that puts pressure on everything, from stocks to crypto. Even gold, which usually rises during uncertainty, dropped sharply, along with silver and major mining stocks. There have been a few bright spots, though. Rivian shares jumped after a major deal with Uber, signaling that innovation continues despite the chaos. But overall, the message is clear. The longer this conflict continues, the bigger the risk for the global economy. And right now, the world is watching very closely.